So whenever we're looking at financial statements, one of the big numbers that you see in most financial statements is on the income statement. And that's revenue or sales, however you want to call it, revenue or sales. Those are interchangeable terms. So when, how much do I get to recognize? Right? This is why I'm in business. I'm in business to generate this. And so there's always an eagerness to recognize this as much as possible and as quickly as possible. But there are standards. There are standards that are generally accepted that organizations should follow so that everyone is recognizing their revenue in accordance with some established procedure, whatever that established procedure is. So what we want to try to do is at least identify what are those procedures. So there's 5 specific things you've got to do in order to recognize revenue. You've got to go through, and this is basically, it's the revenue recognition standard and we're just talking about U.S. companies, right? So the revenue recognition standard for U.S. companies, it's not that much different for international companies, but we're dealing with United States accounting principles in this class. So we're looking at, when do I get to recognize revenue? And from time to time, you might hear some nerdy accountant say that this is based off of some standard, and they'll quote chapter and verse from accounting standards, and they'll call it ASC 606. So what ASC is, as a definition, we'll just put this down here. This is the accounting standards codification. Do you have to know this? No. Do you? If some auditor or accountant or somebody says, well, that's ASC 606, you're not just going to be scratching your head going, what the hell does that mean? You know what ASC stands for, and they are quoting some chapter within that code. So let's talk about the 5 elements that dictate revenue recognition under ASC 606. So with any type of organization, any type of thing we're doing, we're generally entering into contracts. So we have to identify, as an organization, the contract with the customer. So let's identify, so here's first thing, identify the contract with a customer. Now, this can be a written, could be a handshake. There's my handshake. It could be a click, right? If we're thinking about Amazon, how do they identify the contract with a customer? Well, when you go onto Amazon and you click the button that says buy, you have entered into a contract with Amazon. That's how you identify the contract, whether it's through Amazon or through one of Amazon's resellers. So that click is the contract, or it may be more formal where it's a written contract with both parties sign. But we've got to figure out what is the normal for your business. What's the normal way you go about entering into contracts? Is it written? Is it a click? Is it a handshake? Is it a phone call? How do you do it? So we have to identify the contract with the customer before we can do anything else. Within that contract, we need to identify the performance obligation. So what do I have to do as the vendor, as the business, to satisfy the customer? What are my performance obligations? So I have to identify the performance obligations. And it may be a singular or plural. There may be more than one obligation. Maybe other things you've got to do within the contract. This contract becomes very important, right? And that's going to be that's going to give you the preponderance of evidence as to whether or not you can or cannot recognize revenue. Now that you've identified the contract, you identify the performance obligations. Well, what's the overall price? So we have to determine the transaction price. So when I do a click on Amazon, I click it, right? We already know what the contract price is. We already know what the performance obligation is. Performance obligation is get me that stuff. And the transaction price is already determined because I've agreed to this particular price. And whatever taxes I have to pay, et cetera, et cetera. So on the click with Amazon, it's the click. The performance obligation is Amazon has to get me the stuff. And the price is what I agreed to. It has nothing to do whether or not I'm going to collect it. It just, we've determined this. Now that we've determined the transaction price, well, what if we have multiple performance obligations on this contract with a customer? What if we have to do a number of different things? Well, I have to go through the process of allocating the transaction price to the performance obligation. Now, if there's one obligation, it's easy, right? The entire transaction price goes to that one obligation. Not that hard. But if it's a transaction price, a singular transaction price, and there's multiple performance obligations, then I have to do some kind of allocation of the transaction price to all of these different performance obligations. We haven't recognized any revenue yet. It's the fifth step that allows us to recognize revenue. And that's, we recognize revenue when we satisfy the performance obligations. All right. Now, I only put this singular because if I have multiple performance obligations, well, as I only will recognize revenue when that obligation is satisfied. I may not have satisfied the other 2 or 3 obligations. When I finally finish those, then I can recognize revenue. But I can only recognize revenue when the obligation is satisfied. That's it. So this is your revenue recognition standard, right? In ASC, which is Accounting Standards Codification 606. And this dictates everything that you need to do. Now, there's going to be some questions about some of this stuff. And you should question it. And we'll get into some of these weird things as we move forward.